With the news that came out about the new strain of COVID, there's a lot of fear in the market again, and this is related to COVID. So on Friday, we saw something similar to what we saw back in 2020. So we're going to take a look at a couple of charts, and we're going to compare them to what happened in 2020 versus where we are now. But then I also want to take a look at some stocks that could have opportunities should we see some continued market weakness like we did see in 2020. So pretty quickly, I just want to go through where we are in the market and where we were because of Friday. So basically, I have a list where I watch all of the different sectors, and every single one of them was red, and closed red on Friday. So the ones that had the most weakness, here we have travel and leisure that I watch, a couple of different tickers that I watch there. You can see we had a huge gap down. I mean, that's pretty big for an entire ETF to gap down 7%. Jets, we gap down 7%. And PEJ, same thing. These are daily oversold. The RSI is down at 23 here. Uranium, same thing. Big gap down. Closed with, it's almost a bullish hammer. Then we've got the energy sector, same thing, big gap down, close with the bullish hammer. Metals and mining. This is the small caps, big gap down. And this is, so I had a setup here. We obviously broke very bearish out of that setup. This is for the mid caps, big gap down. So you can see across the market, we had a very red day on Friday. And it's very red. It's not just a regular red day. This is a big gap down for most of them. Tech isn't that bad. Surprisingly, QQQ, we didn't have a huge gap down, and we look like we have some support there on that EMA 26. And then the telecoms, big gap down. But let's take a look at the VIX. Huge gap up. So this went up 54%. Now that is a huge gap up for the VIX. So if we take a look back in history when that happened, so let's go back here to 2020. Here we had a huge gap up on the VIX as well. And this was our big COVID dip. So when SPY and the whole market is dropping, the VIX is going up because volatility is high. So we went up a huge amount the first day, and we continued. So it's not to say that that's not going to happen here. We could definitely go through the same thing that we went through back then. And if I just go over and quickly look at SPY and look at SPY 2020, here's our COVID dip. The first day was a big gap down, and then we continued with many days like that until we hit the lows, and then we had huge gains following that, getting us to where we are today. So are we starting something like that? Well, it's too early to tell, but we do have a lot of oversold levels, so we might see small bounces in some of the areas, but we are definitely in some daily consolidation because we've gone below the EMA 26 here. And if you look at the weekly, we're finally getting some weekly consolidation. It just happened very quickly in one day, half a day. So we will continue to watch the whole market to see if we are going to have the same type of thing that we had happen back in 2020. It is COVID related like it was back then, but we don't have the same fear because it isn't the first time. So whether we're going to see that same reaction is debatable. But I do want to take a look at some other tickers where there could be opportunities. So while the market's dropping, I do two things. I look at hedging my positions, so looking for bearish positions in some of these sectors that have the most weakness. Then I will also look at areas that don't have this market weakness, and where do I see those areas? And so we're going to get into those right now. APT had a big day on Friday. While the rest of the market was tanking, APT had a big gap up and ran 25% with the COVID related news. So if we go back to February 2020 and take a look at what happened over here to APT with this COVID related news, it was the opposite of what happened to SPY and all the rest of those ETFs that we just looked at, which represent all the different sectors of the market. So here we had a huge gap up, and we just continued run. This was like a massive pump that went through a few weeks in February. Then we pulled back, but continued uptrending for a long time. But since somewhere around February of 2021, we have been dropping and heading back down to where we came from. So we're close to where we started. This is one that I'm keeping my eye on, because if we are going to see the same type of market reaction that we saw in February of 2020, then I'm going to be looking for areas that we are having an opposite reaction. And we had an opposite reaction here back in February 2020. So this is one that I'm going to watch. Yes, we have a gap below. So it would definitely be more appealing to me if that gap were to get filled. So what I'm looking for on Monday, because we had a little bit of a market overreaction, and this is what you're hearing all over the place, is that it was a market overreaction. So we could see some bounce in the rest of the market. And when the rest of the market is bouncing, we could see the gap getting filled in this ticker and some of the other tickers that we're going to look at. So although I'm looking at some tickers that I think could be opportunities going forward if we have market weakness, just keep in mind that the charts aren't all exactly ready right now to enter. We need certain things to happen, but they're really just on watch. So these are some of the areas that I'm watching going forward. Now, a couple of the obvious ones to watch, the vaccine tickers that everybody knows about, MRNA and PFE, so Moderna and Pfizer. So PFE, we had a huge gap and we're into all-time highs again for PFE. So this one, we could continue to see further momentum, or we could see this gap getting filled. It all depends on what happens with the rest of the market. But this one, if we filling this gap, would make this a healthier one. This would be something I would be interested in, because then we would be close to all-time highs if we were to fill this gap. So this is on watch for me. And then MRNA. So let's just go quickly back and look at MRNA back in February 2020. So we were down here around the $20 area. So this isn't like the APT one that we looked at. This one, we had big momentum, but it's been a healthy move up. So yes, this stock is worth way more than it was back then, but we just started pulling back a little bit here in September of 2021, and we were riding along this SMA 100, which was keeping us in an uptrend, and then we had earnings, so we have dropped down here because of earnings, and it looks like earnings reaction. I don't really know, I haven't read the earnings, but since then we have started to try and make the way back up, and now we have a big gap. We just touched this SMA 100, so this is not as strong as PFE, but it's one that is definitely on watch, because we could just continue further up until we hit a new all-time high, and we could continue up into blue skies. So it's something to watch. So PFE and MRNA are very similar in the fact that we have a gap below, and I'd like to see that gap filled and then possible continuation. BNTX, again, with another big day on Friday, but the difference in this one is that we looked like we were going to have a breakout here. This was having a bullish flag look to it, and we were hovering right on this SMA 100. So this chart was starting to get some strength back into it anyway, and then we have a big gap up and a 14% day here. So we've left a gap below. So again, we want to see this gap get filled at some point if this is something that we're going to be holding for a long amount of time. If you're going to just day trade this and the momentum continues, then that's something that's different. But the gap being filled is definitely something I would like to see for something I'm going to hold and swing overnight. We want to, let's just take a look back at in 2020 here. It's BNTX. So it used to be a $32 stock, and it's just been pumping ever since. And now it is a $340 stock. So we've seen a huge increase. If I can just measure it from 32. It's gone up 1,000% since 2020. So I don't know if the fundamentals have changed to warrant that on this ticker, because I don't really know anything about it, but that is something to keep in mind. But it is basically getting a lot of bull volume. Look at that bull volume, that candle compared to all the rest of the days. So we had a really good day on Friday, and yeah, huge spiking on Friday. So this is one to keep on watch for more moves going forward. Once we get through this, for this all-time high level, we could continue up with this one. NVAX, another big day for this ticker on Friday, almost 9%, and we've left a gap below, of course, just like the other ones. But also something about this one is it was already starting to look like inverse head and shoulders here. So you can see we were having that inverse head and shoulders look, and it is starting to play out. So that would bring us back up here, which would be into a new all-time high territory. So that doesn't say that we're not going to come back down to fill this gap, but is definitely a possibility that we continue on with this inverse head and shoulders. And if we just go back quickly and see where this one was in February of 2020, January 2020, this one has moved up huge as well. And measuring from where we started to where we are now, 5,000%. We've gone up 5,000% since this used to be a $4 stock, and it is now a $200 stock. So I would want to research this as well and see why this one is definitely worth so much more, but it's been holding its value. It is riding, and we also have continued to have pumps. So there's got to be something in this ticker that is definitely keeping this chart strong. But we have started to pull back. We did start to pull back, but we've started to also try and continue to recover here, making this inverse head and shoulders, but also this bull flag looking pattern right before our big gap up. So although, yes, it's been a huge increase since February of 2020, and obviously it looks like the COVID news has definitely helped this ticker, if we go back in history, we've already been worth this much. Like, this ticker was worth this much. So it just was having some weakness. So it was either up here for a while, and then we had some weakness just before the whole COVID thing. But weekly, this is also weekly, looking like weekly inverse head and shoulders. So should the COVID fears continue and market weakness continue in all of the other areas, this one would definitely be something that is interesting. If we can break this 300 and then break this 331.68, then we would be in blue sky breakout, and that inverse head and shoulders on the weekly just really has me interested in seeing how high this one can go. So I'll definitely be watching NVAX. CODX. Now this is a strong chart. We've been hovering just around this, just over top of this SMA 100, and trying to just keep this ticker up here, because if we look back to January 2020, like, that was a huge run, pretty high. It's up 2,000% since then. So it's definitely, but it's been just steadily holding up here. So we haven't seen a huge jump. Yeah, we've dropped down here, and then we've just sort of crept our way back up, and we've been holding, but not near the all-time high. So yeah, there's been some pullback, but it's been pretty healthy pullback, just because although we had some big earnings reaction, but we've started to come up with every other earnings after that. So this chart looks pretty good to keep an eye on going forward. Our gap below is not that big, and we had a pretty strong close. So if we flip over to the weekly, we can see measuring the move from January 2020 up until to the top and where we are now. We're measuring the retracement, and we can see that we have retraced to the fibs 0.236 level really well there. You can see we've been holding that level for these, each one of these candlesticks represents a week. So we've been holding that level for a long time. So that is something that keeps this chart looking healthy, because we've had sufficient retracement off of that huge move, and we've just been holding sort of in this area. So this ticker will be on watch for me going forward if the market does continue to have weakness. So all of these tickers that I looked at, like I said before, aren't definitely ready to enter, but there's something that I'm going to be watching along with my other hedging that I'm going to be doing should we continue to have market weakness. So these tickers are going to be on the back burner for me. In the meantime, what I'll be looking at is looking at the possibility of some bounces in the market, because we had such a big drop in a lot of areas, there's going to be a lot of possible bounce plays. So it all depends if this is a buy the dip scenario, or if this ends up just being like what we saw back in February of 2020. And even though, you know, I analyze charts and stuff like that a lot, this isn't something that you can really predict, because news and fear can drive the market in ways that the chart just cannot tell you that that is going to come. So I will take it day by day, look for hedging my positions, also looking at areas like this where I can possibly make some profit when the market is going through weakness, and look at playing bounces. So I hope that everybody has a great trading week going forward, and I'll see you in the next one.